In this recording, we're going to walk through exercise 8-13A. So, let's get started. We have the following long-term available for sale security transactions. Transaction A, we purchased 520 shares of Florida Fine Foods common stock at $35 per share with the intent of holding the stock for the indefinite future. Okay, so the journal entry we write for this, we're going to increase the investment in AFSS, that stands for Available for Sale Securities, and the amount is going to be the 520 shares we bought at $35 a share. So we have $18,200 and we credit cash. So we're recording that at cost. That's entry A. Now, entry B. It says we received a cash dividend of $1.80 per share on the investment. Well, 520 shares times $1.80 a share, $936. So we're going to have cash debited, because it's increasing, and credit dividend revenue for $936. Okay, so far this is very similar to what we've done in class. I think we did one very similar. Now in entry C, at year end, we adjusted the investment account to fair value of $42 per share. Okay, so to do that, we want to increase the investment because the investment has gone from $35 a share to $42. That increases our investment. Our investment is an asset. Assets increase with debits. So we're going to debit allowance to adjust investment to market for the 520 shares times the unrealized gain, the $42 current value minus the $35 original cost, and we get $3,640. And our unrealized gain then is also the $3,640. So that's the adjustment to adjust the investment when we have a gain. This is an unrealized gain because we have not sold it. We are simply adjusting to market value. Next up, Part D, we sold the stock for the price of $27 per share. Okay, this one's going to take a little bit of work. We're going to have to do several lines, so we'll just dig in one at a time. First of all, we sold it for $27 a share. The easiest part of this entry to do is the cash part. 520 shares at $27 a share gives us $14,040 as our cash, and that's debited because we're getting cash. Okay, now the next part of this journal entry I'm going to do two lines simultaneously. Why? And you'll see why. And I'm leaving extra lines, and you want to leave extra lines too, because this entry actually I think has 5 lines in it, 5 entries. So this next one, what I have to do, since I'm selling the stock, I want to get rid of that unrealized gain I recognized back in entry C. So I have to do entry C backwards. So I'm going to debit unrealized gain of $3,640, credit allowance to adjust investment in available for sale securities to market for $3,640. Again, that is entry C backwards. I'm just wiping it out because I don't have an unrealized gain now. I've sold this, that unrealized gain is gone, so I want to wipe that out completely. And do notice I left a couple blank lines because we're going back to fill those in. Okay, next up, I'm going to credit the investment in available for sale securities. This is the original cost of the investment. This is what we had entered up in entry A. We purchased 520 shares at $35 a share. That's the $18,200. So I have to credit that to get it off my books. I want to wipe that out, so I'm crediting it. I'm reducing the asset value. And then that leaves me with my final line for this entry. There are 4 lines. Okay, so the final line for the entry is called loss on sale. How did I get the number 4,160? Well, I got the number by figuring out what I needed to balance my journal entry. Remember, my journal entry debits have to equal my journal entry credits. So I took 14,040 plus 3,640, subtracted 18,200, and subtracted 3,640. And I got this difference of 4,160. I don't care if it's negative. I'm just looking for the difference between my debits and my credits, and then I have to put this on the debit side to make it balance. So now if I added my debits, the 14,040, the 4,160, the 3,640, that would equal the 18,200 plus the 3,640. So remember, journal entries always have to balance. So that's how I can figure out my loss. Now, another way to look at the loss, I could get to it, is I could say, well, gee, I bought this for $35 a share. I sold it for $27 a share. So that's a difference of $8 a share, and I had 520 shares. So I could also get to the loss that way, I believe. So that's it on this exercise. That does it for this exercise.